And there's been a lot of discussion around institutional adoption of digital assets. From your perspective, what are institutionals actually looking for to participate? I mean, not all of them are doing this yet, but there's many of the big ones that, have been a little bit more forward on it.
Yeah, there's multiple sides, right? One of them is tokenization, as an example. So a lot of exchanges right now, even ICE, right? ICE, by the way, is invested in Poly market, right? As an example, ICE is the parent exchange of NYC. They right now recently invested in another stablecoin settlement platform as well. So they've been investing in crypto and like more of an advanced type of trading, like prediction markets. They're also investing in tokenization. So eventually, I think also going to take some time, but all those assets are going to be settled and traded 24/7. So that's one thing of crypto, right? That provides infrastructure for trading and settlement layer and clearance that will be fully automated and available 24/7. I think in terms of the asset managers, most of them have crypto dedicated desks right now, small and large size. They all participate in the market in one way or the other. Some active trading, some spot and index. Everybody know about ETFs, Bitcoin ETFs, right? There's about, I don't know, 15 ETFs right now from small to large, and there's different issuers and administrators of that. So ETFs are affiliated in every channel possible in distribution already. So I think what's missing right now is pretty much DeFi access because it's still unregulated and still non-compliant per US rules, I would say. What's missing is active management. So it's still pretty niche. So you can find hedge funds like, let's say, Renaissance, Millennium, right, in traditional world. There's no like Renaissance or Millennium right now in crypto. There are some good hedge funds, but there's market is too small to be well known. So I think eventually the bigger guys are going to start proliferating into the active management as well, more actively, and providing it exposure to their client book as well. So DeFi active management is still probably another 3 years to go, I would say. But like passive products like staking, like ETFs, like custody, like spot, already pretty well entrenched into the asset management world. Traditional.
So what infrastructure gaps still need to be solved for broader institutional participation?
I think it's a lot around tax treatment is one. Let's say in DeFi, a lot of those coins, people don't know how to treat them. Compliance. So like in DeFi, you swap on a pool with a counterparty you don't know. So OFAC, right? Gated private pools. So that's DeFi. I think active asset management is more about risk and manipulation. So there's a lot of those exchanges that get manipulated. So you probably can be reassured that US domicile exchanges are not manipulated, but a lot of volumes are coming from Asia, like Binance, OKX, Bybit, and you don't know, right? So I think they all have to go onshore. They have to all comply. There's a lot of things, and then there's trade surveillance. There's like fairness rules, right? Execution fairness and so forth. So I think that's a problem as well for the active trading side, right? Because if you're buying spot, you can be buying OTC, you can be buying in Coinbase, you can be buying from Tier W, like larger OTC providers, market makers. But if you're participating in active management, primarily it's all Asian exchanges that have this liquidity and the tools. And DeFi, yeah, again, it's compliance and regulatory and tax treatment of those assets on your balance sheet.